when the stock market goes down by more than 20%, it's considered a bear market, right? And when the market's going up by that level, it's a bull market. So obviously, when there's a bear market and people are seeing they've lost that level amount of money, it raises all these things we've been discussing. But what lessons have we learned from previous bear markets we've applied to this one? And I want to start with Larry, and I'm going to go to AJ after that. So Larry, can we go to you first in terms of other lessons that you've kind of experienced from previous times that you've applied here, and then maybe a later question we can ask is a contrast to that. But let's start there in terms of what have you learned?
Okay. What we've learned is that we need to help people breathe, and that may be a different answer. But I remember in 1987, for those of us who are that old, that we lost a third of our value basically in a day, and that got everybody excited. But what the lesson is that I've been able to bring forward to people, and what we talked about is, going back to what Chris was saying earlier, things do go up and down and they do cycle. But in 1987, if you had $1 in October, it went down to roughly 70 to 75 cents, depending on how you had it invested. But if you stayed with your program, with your process, with your goals, and you're able to breathe and say, okay, this isn't the end of the world, that on December 31st that year, your investment had come back to $1.01. And I share that with people now. That's a lesson. I'm very careful not to say or to try to predict where the market's going and how quickly it's going to come back. But the thought is to stay with what you're doing and to think about what you're trying to achieve in the long run. And I think that that's a valuable lesson to take forward and to talk to people about today. So it's very similar to what everybody else is doing, just a different concept. Mm-hmm. If you skip forward to 2008, we could talk about that all day long, but there are some similarities and some dissimilarities to 2008. But it's to get people to think through the process and to think through the situation and to have them really come back to you and be able to say, I don't think this is the end of the day. I don't think this is the end of life. We're going to work through this and we're going to stay on the course, assuming that you're on the course they wanted to be on before the disaster hit.
Right. Which is, I think, ultimately our job is checking in with people as they progress in their life and getting a plan in place. And I know we have a bunch of golfers in this conference call too, but keeping people in the fairway, right? It doesn't mean necessarily that we're always hitting the perfect shot, but we're getting closer to their goals with how we're allocating and how we're adapting to the risk tolerances, as Chris was saying. So AJ, I do want to adapt over to you, but maybe a better way or maybe another way to tackle that question is maybe, well, what is a little bit different in terms of lessons you've learned from previous financial crises and bear markets? What have you seen in terms of lessons, but also what's been a little bit new this time?
I think the new part is the personal risk, right? The individual physical, health risk that is brand new. The idea of the pandemic, and so people are worried about them or their loved ones getting sick is a real big different, big variable, big change here. I think when we've been talking to clients and we look at, if you look at the stock chart of the S&P 500, over the last, during this bull market and up till now, it's not going to look a lot different than other bear markets. And then what our recovery looks like. There's, and everybody seems to want to have this be different than everything else. I think from it's a dramatic market swing. It's a lot of volatility. It's scary, but if the financial plan's built on reasonable return expectations and the risk tolerance is taken into account, then people should be fine. These are not unexpected events. We just don't know when they're going to happen. We don't know what they're going to look like, but we know that the market goes through these gyrations. And when you have a year like you had in 2019 with the market up, 20+%, you just know, we know in the business that that's just way above any sort of normal average. So we know that we have to plan for, have financial plans built upon realistic assumptions for returns in different asset classes. So when we do that, that's fine. I think the big difference here is the fact that it's a mysterious, invisible, physical danger, and that's so different than a lot of other bear markets.
Mm-hmm.
I'll add to that too, and again, in my previous career iteration was within a community bank trust channel, and one of the things I really learned from that is there were in terms of conversations about what's going to happen when something bad happens, is that we didn't have a lot of that kind of training of, well, let's talk about the bad stuff too, and what is the plan going into it. So, and I know Abby's heard me kind of ad nauseum, Larry as well on this, is, getting these client meetings in for the last 6, 7, 8 years, it's been the echo of that of, hey, and when that bear market happens, here's what we're going to do, and here's the plan. So let's talk about that well in advance and keep repeating it. So, and then when they're calling us right now and they're asking, well, what are you doing? Well, it's just consistent with what we've been talking about over our relationship together, so that there's not surprises. So when they call you up and say, well, why did you rebalance, as Wes was talking about, or why did you do that? Well, that's all part of what we talked about. That's all part of the plan. And it just lowers that anxiety, right? It's just because, hey, we've already talked about it. This is what we're doing. This is why we're doing it. This is why we did what we did. And there's really just no surprise to all those things. And I think that's where, again, in my previous stop in the financial crisis, was they didn't know what was going to go on. They didn't know what you're going to do. So, and that actually heightened the anxiety, it heightened the fear. So when you talk to people, they are on the edge, and you had to let them go over that mountain of worry. So I like that. Actually, and I think we've been receiving, Abby, Larry, and myself, with a lot of our calls, is people are actually going, how do we rebalance back in? How do we buy more? They've almost had the reaction of being a little, can we take more risk? And we've had to have that conversation about risk tolerance, as Chris was talking about there. So it's a little bit of an inverse, weird kind of thing going on there. But from that end, again, I think that was a pretty good lesson I personally learned there.